Right, Tanbir, thanks a lot for that. It's time for our quarterly chat with the top management of Infosys, and I have with me the CEO, Mr. Dish Bulal, the CEO, Mr. Praveen Rao, and the CFO, Rajiv Bansal. Gentlemen, thank you for joining us. The first question has to be to you, Shibu, obviously. A word on how things have moved for Infosys for the quarter gone by.
So I think it has been a fairly good quarter for us. We have grown by 2% in reported currency terms, 1.5% in constant currency terms, 2.9% in volume terms. So the volume growth has been pretty good. Our margins also have actually, in my mind, improved, 25.1% for the quarter compared with 25.5% last quarter after taking an impact of the compensation visa. And more importantly, we have paid out $8 million to Infosys Foundation for CSR activities as per the new company's bill. So this is after the $8 million which we have paid to Infosys Foundation. Actually, if you consider that, it will be 25.5%, same as last quarter. Our EPS is down from last quarter, but better than what we have said, because we were expecting a 200 basis point downward because of the compensation change. On operating parameters, all the things we have done over the last 3-4 quarters have yielded results. Our utilization has gone up to 80% from 74%, and that has benefited our margins. On-site offshore ratio is marginally down. Very good client additions. 61 new clients this quarter, one of the highest. Large deal wins, which we have been working on for a while now. We have 5 large deal wins this quarter, adding up to $700 million of TCV. So fairly okay growth, margins in the right direction, good client additions and good deal wins, solid volume movement. With all that, we have kept our guidance at 7.9% because we are just at the end of first quarter.
It's been a good quarter of all-round growth, but the curiosity from market standpoint, Shibu, is what will happen after this quarter when Vishal Sikka takes over. How will things change? How soon will things change? The fact that you have not changed your guidance, it clearly means that you don't expect magical things to happen this year.
So our guidance, as I said in the past, is a statement of fact. I don't think it's person dependent. It's a statement of fact. And considering this quarter's growth and what we see for the rest of the year and what we see, Infosys sees in its client base, right? Because our guidance is about us and what we see in the market and what we experience in the market. We have kept our guidance 7 to 9%. From a strategic perspective, we have completed our transformation to 3.0 and it is in execution. This quarter, we have won large deals. Our consulting revenue has moved positively. We have launched Edgeware, the company which will focus on products and platforms. So from a strategic perspective also, things are moving ahead.
Things are moving ahead, but my question is about curiosity of what will happen. So let me rephrase my next question slightly differently. What is your handover to Mr. Sikka? What are the things he needs to do immediately? Because the problems have been well identified by you. You've been very articulate about the problems. How will he sort them out? What is that big message to him?
First and foremost, I clearly believe that I'm handing over a stronger Infosys. I think when I took over, we were faced with a number of internal and external challenges. Externally, it was a tough economic situation. Our clients were tentative. We had a number of internal challenges. We faced with employee retaliation suits. We were faced with an investigation from the US Department of Justice. We had not applied for adequate visas, which had increased our subcontracting costs, which impacted our margins. So a number of internal issues. If you look at it today, and if you look at last year, we are behind all of those. We doubled our growth rate from last year to last year, 5.8 to 11.5%. So we are definitely a stronger Infosys today than what was in the past. Vishal is a visionary leader. He has an excellent team of people. Praveen has been with the company for the last 25 years. They are on they are inheriting a stronger Infosys, and I wish them all the best.
Okay. Praveen, let's talk about one alarming number, and the alarming number is the attrition rate. It is a high number. Why is that?
The attrition is high, definitely.
It's very high, actually.
But you have to look at it this quarter. Quarter one is historically where our attrition is always maybe 300 basis points higher than the typical attrition you see in rest of the quarters. Over the last few quarters, we have done multiple things. We have listened to the employees. We have listened to their concerns. We have addressed many of the concerns. One was around predictability. So we said we'll have compensation increase and promotions on a timely basis. We have published a calendar and we have done that. We have now moved to quarterly promotions so that people can get more opportunities and get promoted quickly. So we rolled it out in quarter 4. In quarter 1 also we have had promotions. So we are doing multiple things on the employee front. Some of it I think it will take a period of time.
So where do you think attrition rate will finally settle? Because the measures which you've introduced, because of that I'm sure attrition rates will come down. Where do you think it will settle?
I think in the long term, historically we have always had 12 to 13%. That's where we are comfortable and that's where we want to track. So it will probably take a few quarters to reach that level. That's our expectation.
It's also a reflection of the demand environment where people are in high demand, and also the fact that we have some of the best people. Our training program is one of the best in the country. Our leadership institute is one of the best. All of those things, also has to be factored in. And as Praveen said, our comfortable rate is somewhere between 13 to 15%. It will happen over a period of time.
Utilization rate, big success story, 80%, congratulations. But is that number here to stay?
I would think so. I would be more than happy with the utilization continuing at more than 80%, and that's what we have been saying in the last couple of quarters, that we would want our utilization to be 80 to 82%. But it's also a factor of the demand that you see, because you want to build the strategic bench. You need to invest in people, keep them ready, train them, and look for opportunities outside. So I think what you would see is that as the demand starts picking up, our utilization would fall marginally. And that would be to invest in a strategic bench. But I think I'm very happy with the utilization having gone up over the last 4 or 5 quarters, reaching 80.1% this quarter, which has really helped us in mitigating the impact of wage hike and visas this quarter. So I think it's a good track record. It gives us a confidence that we can increase our utilization when needed, and it also gives us the confidence to invest in people and train them and keep them ready on the bench. So I think you would see the utilization moving up and down quarter-on-quarter basis depending on how we see the demand for the future. But I think the past few quarters has been a great success story.
Okay, a salary hike is already kicked in, visa costs have kicked in, and margins are at 25% plus. For the rest of the year, can I safely assume that margins would stay in and around 25%?
Again, as I said, it's all about accelerating the growth. We have done a lot of stuff over the last 4 to 5 quarters which have really helped us in improving our margins. We have far more robust cost structures now, which gives us the confidence to invest. But I think important point is to accelerate our growth. To be able to sustain these margins, we have to accelerate our growth. Currently, our guidance is 7 to 9. We would want it to reach the industry levels. And I think for that, we have to make investments. So again, as I said, if the cost structure is good, it gives you the confidence to make investments. A bad cost structure ties your hands up.
Yes.
So we have calculated our cost structure. It has helped us give the confidence to invest in the future. And I would say that, I'm not too worried about the margins at this point of time. I would want the growth to come back, and for that, if the business needs investment, we would be more than glad to make investments.
Shibu, so the ambition clearly is that Infosys should go back to industry average. My question is, will it take 1 year? Will it take more than a year?
So our aspiration always is to have superior financial performance, and that is industry average growth and one of the industry leading margins. Everything we have done, the Infosys 3.0 strategy, the optimizations we have done, all of that is about achieving those aspirations. See, if you remember, Mr. Murthy has said that it will take a certain period of time.
He said 3 years.
So we are about 1 year into that 3 years.
So 2 more years and then you'll go back to industry.
You can never predict the future. You can never predict the future. But the one thing I can say is that we are in the right direction in the journey. Our utilization has improved. Our margins are moving in the right direction. Our growth doubled the last year from last to last year. And our client additions are strong. Our pipeline is stable. So we are in the right direction. You can never predict the future.
North America, 3.7% sequential growth, very impressive. That's a big market for you. Could we expect similar numbers going forward?
I think the pipeline is decent both in North America and Europe. While Europe we have declined, it's probably not a secular trend. It was we had some challenges this quarter. So the pipeline is healthy. But at the same time, visibility is only for 3 to 4 months or something. So that's why, I mean, that's reflected in our guidance as well. But the way things are, we are fairly comfortable. And this time when we look at the growth, it has been across all verticals. So we are optimistic about the pipeline, good pipeline.
Now the India business has suffered, not only for Infosys, but for everyone, because there was lack of decision making. We have a new government in place, a stable government in place. Can India be the differentiating factor going forward? And are you accounting for a revival in India business this year?
I think it will take some time. The new government has just come in. They have to announce initiatives. Some things have to kick off and other things. And initially when you start anything new, it starts, the early phases of the life cycle is, there is limited spend, but most of the spend happens in the middle and tail end of the life cycle. So it's probably too early to say that we'll see recovery in India this year. This year at least India growth will be lower than what we have historically seen. But over a period of time, I think we are optimistic given the new government and their intentions.
Rajiv, for Infosys, the direct correlation between dollar or rupee and dollar seems to be getting marginalized because your size has gone up and also other cross-currency benefits have kicked in. But what is that inflection point beyond which dollar or rupee will start hurting you?
Well, see, the dollar rupee, it's not that the size really impacts the dollar rupee impact on the margin. The fact is that this time, though the dollar rupee appreciated, the cross currencies moved in our favor. So to a large extent, the impact was kind of negated. However, if the cross currency had moved the other way, the impact would have been doubled. So I think that we have to watch out for the rupee. And typically, small volatility in the rupee dollar is something that we can manage over 1 or 2 quarters. But if the rupee starts moving the way it moved last year, then it does show up on the margins. So I think we have a very active hedging strategy, but that is to ensure that the translation losses or gains are set off against the hedging losses.
Is $1 billion enough?
But I think it's enough because the kind of movement we have seen in the rupee, I think it's kind of the forecast from the bankers, from the forex traders. I think the rupee is likely to be in a very narrow range. So our hedging strategy has worked for us in the past. I believe it's a right strategy. It will work for us in the future also. But any big movement in rupee dollar would impact your operating margins, and that is something that you can't wish away because you have a certain cost structure in rupee which gets impacted when you translate into dollars. So that is something that you can't hedge against.
So the historical correlation has not changed?
The correlation has not changed.
Okay. Shibu, as journalist, we always look at the fine print of your commentary, and this time the tone of your commentary is that the pricing environment is stable. What does stable mean? Are things moving up?
So actually stable means that our revenue productivity is not coming down. That's what per person revenue realization is not coming down. It has marginally come down actually this quarter, but generally we are seeing stability in the pricing environment. Please remember, it is a basket of things. It is not that one thing, everything is exactly at the same level. So the large outsourcing deals are always price sensitive, and we have to price it price sensitive. That is an area where market determines the price and we have to determine the cost. There are areas like consulting and system integration, mobility, products and platform. We have such a wide range of services today. So we have to look at it as a portfolio, but at the overall portfolio level, we are able to manage. There are clients which are different, industries which are different, services which are different, geographies which are different. But at a portfolio level, we are seeing stability in revenue realized per employee.
Praveen, when I talk to some of my analyst friends who've been tracking Infosys for years now, nearly 2 decades, there's one common concern, and the common concern is that has Infosys lost a lot of senior management talent? Bala, Ashok, a lot of senior management talent has gone. How do you plan to compensate?
I think we have a healthy bench strength. We have invested in Infosys Leadership Institute about a decade back. At any point in time, we have about 600 plus people who are always trained to take on additional responsibilities. And while sometimes the exit of senior people is, it's always, sometimes you are sorry to see some senior people leave. But at the same time, you have to recognize that it's an opportunity for the next level to step up. And today we have a fantastic set of next level leadership. Many of them have now running segments now, running P&Ls independently. So we are very comfortable. While we are thankful to all the contributions they have made to Infosys, but we have to respect their aspirations, and we are pretty much comfortable. I don't think that's a concern for us. We have enough bench strength. next level, and so on. And we continuously focus on identifying, having a very good succession plan, building competency, capability, and so on. It's not a concern.
Rajiv, you've outlined very clearly the contribution to the Infosys Foundation. So can you give us a number? What would be the total contribution this year to that foundation?
So it would work out to around 240 crores.
Okay.
Right. And so we have contributed about 48 crores in the first quarter.
Okay. So you would spread it across the next 2 or 3.
Yeah, we would spread it across quarters.
One interesting aspect about this quarter has been that your on-site growth has come back, and this has happened after 3 or 4 quarters. Correct me if I'm wrong. That's a great sign. That's a great news that demand seems to be finally moving on your side.
Oh, absolutely. I think that is what gives us the confidence for the subsequent quarters, because if you look at our on-site volumes have actually, as you correctly said, has actually shown an uptick after compared to the last couple of quarters, which means a lot many more projects are starting on-site. And typically projects start on-site and the downstream work happens offshore. Then the ramp-ups happen offshore. So I think it's a great sign, and we have to keep this momentum up. And I think that is kind of reflected in our numbers that we are given as guidance.
Right. Shibu, is this an emotional moment for you? This is the last time we could be talking to you or discussing numbers with you in capacity of the CEO.
So I think this has been a great ride. 33 years, it has been fantastic. I had the privilege of interacting with some of the best human beings which I can interact with, best colleagues one can have, best set of people on the board, best set of people outside Infosys media, our clients, extremely kind clients, and vendor partners and everyone else. So it has been an absolutely fantastic ride, and I have enjoyed every minute of it. I wish everyone a great time. I'm a person who believes that, I've always said that I am a person who believes that life changes, and that's part of life.
Your colleagues, Bala has decided to join politics. Mr. Murthy is now nurturing, new talent. He's involved with a lot of social activities. What are you planning to do?
So we can have that conversation after August.
But 1st. Is that Economic Times story right? That you own 800 apartments in?
Actually, my house is in Boston.
Okay.
I have lived there for many years.
So that story is not right.
My house is in Boston.
Rajiv, let's also understand your guidance. Now, your guidance clearly, like Shibu said, it's a statement of fact. But in an evolving global environment, there are lots of ups and downs.
Absolutely.
Global economies are making a comeback. Are you being slightly conservative here? Do you think global growth could surprise you, and that could surprise you on the upside in the second half?
Not really. See, global economy is definitely on uptick. But if you look at our guidance, we still need to do about 2.2% on the sequential basis for the next 2 quarters to meet our lower end of the guidance, and 3.5% sequentially for the next 2 quarters to meet the upper end of the guidance. So I think having seen the growth in the last couple of quarters, having seen the volume growth this quarter, having seen the demand pipeline and the proposal pipeline, I think we believe our guidance is a fair guidance and something that we believe we would be able to achieve.
I've just one small follow-up question. My studio wants you to ask this one. I want clarity on the CSR plan. I mean, 240 is the maximum commitment that will go to the CSR activity.
See, the companies will prescribe that you have to give 2% of the average profit of the last 3 years, okay, and the number works out to 240 crores.
Okay.
So the company would spend up to 240 crores.
Okay, no confusion on that. Okay, gentlemen, appreciate your time. Shibu, good luck, and I hope next time when you are watching your quarterly numbers, you're watching them on ET now.
Wonderful. Thank you very much.
Thank you so much, gentlemen, and good luck for coming forward.
Thank you so much.
Thank you.